entertainment, insights. Don't take life too seriously. Welcome to Brainsky Unleashed. So on today's program, we are absolutely thrilled to have with us Matt Shields with Significant. He's the CEO of the company. He's got a $60 million real estate portfolio, been operating in real estate for 25 years. The man is a pro. He knows exactly what he's doing. I wanted to have him on today because being a very novice real estate investor myself, I thought that he could bring a very simple nuts and bolts, how to passively invest in real estate. So Matt, welcome to the program. Thanks for coming on.
Thomas, thanks for having me. This should be fun.
Absolutely. So Matt, as we talked a little bit before the show and in the past, I think that there's a lot of people out there in the world who think, hey, I want to invest in real estate. And what does that really mean? And you take somebody like me, and the first thing I think of when we talk about real estate and investing is, I've got to go out and I've got to find some property somewhere and get a mortgage on it. And then maybe I've got to flip it myself, which I'm terrible with, hammer and nails, or find some contractors to flip it or to try and rent it out. But yet there's a whole other way to do this, and it's called passive real estate investing, correct?
Absolutely. Yeah. What you basically described is more of a DIY type approach. So there's a long learning curve to a lot of that. You can obviously jump in, get your feet wet, but I would suggest that if you don't have a background in the trades or understand how things are put together, how the building is configured, it might be best to maybe dip your toe in and get underneath someone who has done that before. And one of the great ways to be able to do that is by investing passively, with those various different operators. And there's a number of different ways that you can invest into real estate as well. You can think of single family homes, multifamily. We personally invest in large multifamily real estate. So that's kind of, a little bit more elevated in the learning curve, with what you need to know and all the different connections you have to have and the amounts that you have to be able to raise. So it's definitely something that you wouldn't want to take on, just DIY, without, joining any types of groups or having anyone, that can show you the ropes. But again, passive investing essentially is looking for people that you connect well with, who are in this space, who have a positive track record with, how to do this and how to manage these types of projects. And then you basically invest into that particular opportunity and, then get paid, just depending on how the cash flows are. Sometimes it's quarterly, sometimes it's monthly. Sometimes it's more of a appreciation play where you might not necessarily have as much cash flow coming in at first, but that appreciation builds over the course of a few years. And then you would refinance it and, pull the cash out or sell the property and pull the cash out then at that point.
All right. So let's break this down to Tom level. All right.
Okay.
So the first thing you said is large family real estate. What does that look like? Because I'm just going to say, I know what a house looks like. I know what a duplex looks like. I know what an apartment complex looks like, or a condo.
Yep.
What does that look like?
Yeah. So it's what we do today is more apartment building type projects. So that can be, many different things. We have one community that we basically run as a community, but it's 6 separate buildings that are all located, let's call it within maybe a quarter mile of one another. You can basically walk to all of them. But, we look at that as one community, one apartment community. We also have other communities where, there's, one piece of land and there might be 10, 12, 15, 20 different buildings on that particular land. And maybe there's 10 or 15 apartments in each one of the buildings. So that's what multifamily is. And it's really a matter of, when you find those types of opportunities, it's a matter of determining what it is you're going to do to that property to, be able to increase the rents or make it a better place to live. And formulate the plan to be able to execute whatever that plan is, so that you can achieve what you're expecting to be able to achieve.
Okay, so I'm passive. I just want to put my money somewhere. I want to invest in real estate. I,
Mhm.
I believe that, I will make money with real estate and not necessarily just put all of my money in the stock market or whatever, right? So I come to somebody like you and I'm like, hey, I want to invest. And you're
Mhm.
going to look at me and go, well, okay. So how does that conversation go? I mean, if I say I've got 50,000 or 100,000 or 20,000, I mean, where should somebody be if they wanted to just simply invest passively? And again, that doesn't mean that the investor is actually doing anything except putting money into your project, and
Yep.
then you are forwarding that, taking that money and turning that money into more money.
Yep. Yep.
That's
Exactly.
so what does that
So
conversation look like?
So that conversation basically starts with a presentation of the various different opportunities. I mean, you also you want to get to know people first. I guess this is where we probably should start with this. You want to start understanding what people are doing, how they're managing things, how are they operating. So, if you're thinking about investing in multifamily, reach out to some people that are in that space, and again, just start developing that rapport, and seeing what types of content they put out. Are they constantly talking about the various different things that they might be doing, right? So you want to start developing a relationship with these people so that you can know and like them and understand them a little bit more. And then when there is an opportunity, normally I would say that when you meet someone, uh, there probably isn't necessarily an opportunity available right then and there. But again, the good operators are constantly looking for additional opportunities and additional properties. Um, and when they do have one, then they can reach out to you, right? And that conversation is going to be based around what we call an operating, or an OM, right? Operating memorandum, right? So basically, what that is everyone's seen various different pitch decks and all of that. It's sort of breaking the opportunity down. Here's what it looks like. Here's where it is. One of the things you want to look at is what types of things are around the property. To evaluate the area. How close is it to shopping? What types of stores are around it? Is it check cashing places, or more of the like lower end type fast food places, or is it in a high end, there's a Porsche dealership and
High rent
Lamborghini
district.
dealership. Yeah, so that gives you an idea as to what the area is like, right? And what that area is like is going to kind of define what that plan is going to entail, which is exactly what is all included in this OM. It's going to show this is where they are right now. Here's where the comps are at, in this area. So, right now we're down here. We should be able to get up to the rents up here. And we're going to do this, this, and this to be able to get there. And then you get into what the actual investment minimums are, right? So that'll be explained as well. Most of the time, these opportunities will have some type of a minimum investment, that is needed. Depending on the particular deal, that could be 50,000, 100,000, 250,000. So what we found was that we created a fractionalized fund as well to be able to basically offer these opportunities to pretty well anyone. Obviously, that has a little bit of money to be able to invest. So the way that works is we put all of the opportunities that we have available into this fund, and you can pick and choose, like, I like this deal, I like this deal, I like this deal, and there's really no minimum at going in through that fund. So basically, the way that it is the fund raises the money, and as long as the fund can meet the minimum requirement of that particular opportunity, that's how you're able to invest into into that particular asset. So you could get started with as little as 5,000, and obviously there's no limit to be able to say I want to be able to go up to this other level too. So so really, I would say that that's the way that conversation should evolve and should progress, and how you should be learning about it. I'll also say too that one of the mistakes that I see a lot of people making is they don't focus in on the square footage of the opportunity. And this is kind of one of the key things that you should be aware of as a passive investor, to be able to validate and verify that particular opportunity. So what you want to do, and this is what a lot of operators kind of glance over, is if you have a 2-bedroom in your target asset, your target thing that you're trying to acquire, and then you see down the road there's an apartment community that has 2-bedroom units that are $750 more than where you're at, you think the operator or the person offering this particular opportunity might have in there that, we're going to be able to get, $750 more for ours as well. But the problem is, think about when you're going and looking for a 2-bedroom apartment, right? I don't know if you're living in an apartment or not, but, just put yourself in that type of mindset.
I have in the
When you
past.
walk
I,
in,
I don't know, but I have in the past.
Brainsky Unleashed is powered by ProfitMax. Did you know that 93% of businesses overpay on their taxes? Do you pay too much in taxes? A recent study showed that businesses are overpaying between 34 and 71%. ProfitMax is proven, legal tax strategy solutions to reduce your tax burden. I'm not only a client, but I even joined the team to help other business owners just like me pay only their fair share and nothing more. Go to profitmax.co. That's profitmax.co. Profitmax.co to find out more. You can even connect with me there, as you should. And I'll help make sure that your tax bill is legally as low as allowed. ProfitMax. Keep your cash.
yeah. So when you walk into those spaces, you're thinking like, how is my stuff going to fit in here, right?
You think
And
so?
yeah, exactly. My couch is going to fit here. My bed's going to fit here. It'll, everything I have, everything I need will work in this space. The problem that a lot of people don't necessarily realize is that that other apartment building or that other apartment that's down the road for $750 more, it might be a larger, larger space than what you have. So you might not be able to get your target up to whatever that target is, right? Or I should say your asset that you're going to acquire might not be able to get up to what that comp price is, right? So what you want to do is break that down per square feet. So, this one is say $1,500 per month, and it's 1,000 square feet. So it's $1.50 per square feet. Per square foot. Then you multiply that $1.50 times whatever the size is of the target community or the community that you're looking to acquire. What sizes are those 2 bedrooms? And just make sure that, we're aligned. The square footage price should be about the same, whatever the market, is, but you want to make sure that you're comparing apples to apples. So if it's $1.50 per square feet and your community or your 2-bedroom apartment is only 750 square feet, you're not going to be able to get it up to that same price as what that other one is, right?
Because that other one may be 1,000 square feet or something like that.
Exactly. Yeah.
So what you're saying
exactly.
is giant mistake. Don't make it.
Yep.
At least know what the average square foot price. I guess the average retail square foot price is for that given area.
Yep.
And do your own math to make sure that you don't just get caught with your pants down because you're excited about maybe, well, what's the other guy doing?
Yeah. Yep.
Okay.
Exactly. Exactly. Yeah. And
So with that math, is there any kind of because people are doing this because they want to make money, Matt. So is there any way to look at it and go, okay, well, X amount of square feet should also possibly equal X amount of return on revenue, or the math doesn't work out that way?
Yeah, it doesn't necessarily work out that way. It's more, so typically when we're talking about returns, it's always in an IRR type basis, which is you're also including
IRR
time,
means
internal rate of return.
okay.
So there's a time element that's factored into that. So that's the other thing about real estate is there's always going to be a length of hold that people are going to let you know what that plan is,
It's
right?
6 months, a year, 2 years.
It could be 3 years. It could be 3 years, or it could
Depends on the
be
project.
exactly. Again, if you're going after a pure a pure cash flow play, that thing should start cash flowing, pretty quickly. If you're looking more for an appreciation type play, that might not cash flow until 2-3 years from now. And maybe you don't start getting any returns on your money until that point. So it really just depends on the particular asset how long that's going to take to be able to, start realizing those returns and whatnot. But there's going to be capital events that'll happen as well. So that might be a disposition or a sale is what disposition means. So if you sell that property, you're basically, looking for your return at that point. If you refinance the property, again, that's a capital event, and there should be, something coming back. Yeah. And another thing you want to be aware of too is where you are in the capital stack. Also, so again, depending on the projects, there might be, like an A-class investor, B-class investor, C-class investor. And the way that works is like the A-class investors probably are putting up quite a substantial amount of money, and they are going to get paid first before anybody else does. Like we just had a recent refinance where we basically paid off the A-class investor. He was expensive, which then sets up the opportunity to be able to, start paying down through the rest of the, the rest of the classes of investors.
So from a passive investing standpoint, another critical thing that every passive investor should know is when you're doing that, you must know what class you're in and what does that actually equal. Because if you don't, and you go in unexpectedly or foolishly, you may go in believing you're going to get X, but you only end up getting Y or Z.
Yeah,
which may not be what
exactly. And most of the time too, that the operator, as they're putting together their plan, they'll have that figured out. Like, if you put $100,000 in, this is what your returns should look like, and give you a roundabout idea as to when that is going to start coming, or when that's going to start producing its cash flow.
Okay, so is there any other warning, something that you just sticks out in your head, like, hey, passive investors, you may want to get in on this, and if you do, you must be aware of this, or have we covered it?
I'd say we covered the big things, the things that sort of stand out, and things that you should be looking for. Again, everyone's heard the saying location, location, location. And again, that's what I was talking about before, looking at what types of other stores and retail establishments are around that property. We got into understanding the operator and understanding how they've done on their other projects. I feel like we've covered a good basis. I can't really think of anything off the top of my head that would be, broad enough to be able to say, look for this on all of the particular projects. I will say, actually, another thing, look and see what they are claiming for their returns. Don't get sucked into the possibility of having these huge returns, because chances are, there might not be something right there. I'll say that most opportunities we would underwrite to return between 12 and 15% IRR, right? And we certainly have returned more than that. Actually, the highest one was 32% that we did.
Yeah.
So yeah, so that one was a great opportunity. But if you see that on the operating agreement, or on the OM, basically that sales pitch, there might be something that you want to really pay attention, or really dive into their business plan when you see something like that, because again, it might be too good to be true. Okay. It's always best to underdeliver and overpromise. Under promise and over deliver. I had it backwards all around, right? Yeah. So that's what most operators and most people will set it up today as, and not necessarily shoot for the stars and claim that there's going to be these huge returns.
Right. Yeah, so, I mean, listen, even still, 12 to 15% is not a horrible return. It ain't 30, but it's not a horrible return. It certainly beats it beats buying CDs and some of the other things that you could do. And because it's a hard asset, you stand a much better chance of not losing, because it's
and there's other benefits too. Like if you're looking for depreciation and all of that, there's other things that make sure that you understand how cost segregations work, which essentially accelerates the depreciation and allows you to depreciate that asset within the first couple of years.
So from a tax benefit, it's a no-brainer. This is actually one of the places you want to put your money so you can take
Yeah,
advantage of it with taxes. And of course, being with Profit Max, show sponsored by Profit Max, hey, makes a lot of sense. Just throwing that
exactly.
in there.
Exactly.
Certainly
Yeah,
something to
no.
be helping people out with. Okay, so let's transition for a little bit, and I know that you don't have all day with me, and I respect that. Talk to me then about Trade Titans. This is a new project that I know you mentioned, and I know you're excited about.
Yeah, so I feel like I'm at the point in my career where, I feel like I need to start giving back. So Trade Titans essentially is going to be a mastermind program, or is a mastermind program. We're going to have the first one next Wednesday. So this will probably be aired, but after, we have the first one. But essentially it's a pure mastermind program. We've got, free resources on Facebook, free private community there, where we'll be providing a lot of value and a lot of excerpts from our live in-person masterminding. And I don't know if you've ever participated in a mastermind before, but it really helps you break through a lot of the challenges that you might be struggling with, because we get stuck in our own head, and we figure we can't get over this, or we can't achieve this. And when you join together with other people, essentially, this is a group of other experienced people. In our case, it's all different types of entrepreneurs. But you want to come and be willing to open up about your challenges or the things that you're struggling with, because the rest of the group is going to give you tools, suggestions, resources to be able to push through whatever those challenges are. So that's what a true mastermind is, and what our goal is to this will be open to anyone. Obviously, there'll be many different types of businesses and that, but we're really trying to bring into focus the trade professionals. So that's the plumbers, electricians, carpenters, those types of people, to be able to grow and build their business, and then have them invest passively into the various different multifamily opportunities that we have. And what is so great about this is not only can those people be making, their own passive income, but we also are going to need those trade professionals to be able to work on, the various different opportunities and projects as well. So they're able to also, learn about, we've got to replace all of the electric panels, which actually we're doing this right now. We've got to replace all the electric panels, in one of our buildings, because the insurance company, wants those panels updated. Right. So, that is a specific example of a project that that we're undergoing right now. So, so there's always,
this is what you're doing then, is that you've set up an ideal process and program to not only help anyone who wants to learn something and work out issues, but you're giving people who are trade professionals, the people who really get out there and they do the labor on most of these types of projects anyway, an opportunity to be better networked, to learn a little bit more background, but also to be able to invest and actually get more projects and put more money in their pockets. So this is actually a really great idea. I like this.
Yeah. It's a full cycle, process. And really this has really spawned because of problems that we've had finding various different contractors, in the past. And you can't do these types of projects by yourself. There's no way. And again, we're not talking about single family homes here. That's a little bit easier of a process. But when you have, hundreds of thousands of square feet that literally, the walls all need to be painted, you need a good painting contractor to be able to, come in and do all of those updates, replace carpet, same thing, right? You need a team that is able to come in and do that. So, being able to cultivate and grow with these companies is really what Trade Titans is all about. So.
Phenomenal idea, Matt. I actually really like this idea a lot. Now, if I was a tradesman, I'd be in on it absolutely. But considering the last thing you want me to do is hold a hammer, I may jump in just to get something out of the masterminds, but that still doesn't mean I'm going to be putting paint on a wall or a nail in the drywall.
Exactly.
Or screws. Drywalls get screws, don't they? Or
they do get screws.
Yes.
No, they get.
Look at what I know. I'm ready. I'm ready, man.
There you go.
Okay, so how does one find you or learn more about either passive investing or Trade Titans and your mastermind?
Yeah, I would say, for the Trade Titans side of things, we have a free private Facebook community. So just search on Facebook for the Trade Titans, and that pops up. Myself, I also have a podcast which is called Invest in Square Feet. So you can check that out at investinsquarefeet.com. And then I'm available in all the various different social media channels as well. So Facebook Marketplace, or Facebook or LinkedIn or Instagram, just search Matthew Shields and I come up. So,
all right, excellent. Well, thank you so much for joining. Do you have any other final thoughts, any nuggets of wisdom you want to pass along before we close this episode out?
No, Thomas, I'm excited to work with you and Profit Max as well.
Yes.
The services that you guys offer are incredible as well. So, I'm excited about that also. So
happy to have you as a client, Matt. Full disclosure, Matt's working with me. Very excited.
Yes.
So yes. All right. Well, Matt, thank you again. It's been an absolute pleasure. And, I'm actually considering getting to know you more, building and cultivating a relationship. So that way I may be passively investing in some real estate deal that you may have.
Definitely. Yeah, most definitely.
Absolutely. Well, thank you again, Matt.
No problem. Thanks, Thomas.
You bet.